Hello everyone and welcome to this month's Brisbane property market update. This is data recorded by CoreLogic and PropTrack up to the end of May 2023. First of all, a snapshot view of what's been happening in the Brisbane market over the last 4 weeks. Listing volumes have definitely declined. They've shrunk a further 31.6%. Auction clearance rates come off slightly from last month. We're going to explore that a little more in the video today. Buyer activity is very high. House values jumped. A huge jump from last month, 1.5% growth over a 4-week period. Unit values up 1.1%, and overall gross yield sitting at 4.3% for those investors in the market. Now, the main reason that we're seeing this strong growth in the market is that there's very limited supply, and we look at listing volumes, they're lower than last month. Here's some CoreLogic data that shows the number of new listings in Brisbane. You can see it's tracking well below the 5-year average, about 26% lower than the 5-year average, but we're 34.5% below the same time last year. So really low listings, not a lot to buy. And when we look at the total number of listings, we're tracking slightly below this time last year, about 11% under, but according to our 5-year average, we're 39.2% below. So 1/3 or more than that, fewer properties available for sale at the same time that demand is starting to escalate. When we look at sales volumes, we can see on the first graph to the left-hand side there that the 3-month volume of sales in Brisbane is slightly above average for units, and almost back at the average level for houses. And then the total monthly dwelling sales relative to previous years is tracking slightly above the 5-year average, but it's also below this time last year. So we're seeing this heightened demand based on long-term trends at the same time as we're seeing much lower supply. And this is why we've got a floor on property prices and we're starting to see that price growth happen once again. When we look at buyer demand, it's definitely increasing here in Brisbane. We've got auction clearance rates for March 2023. They were 53%, for April 62%, and May came off slightly, 57%. Some confidence was lost when interest rates rose in May after pausing for April, but auctions actually picked up throughout the month of May. So this is the average number that we've seen here. According to Domain, the last weekend in May had an auction clearance rate of 67%, and already the first weekend in June that jumped to 78%. So we can definitely see that buyer activity is getting stronger in terms of auction clearance, but sometimes it's not always a fact that you don't have someone to buy the property. It can be seller sentiment that causes a property not to sell at auction. We've got some data from Apollo Auctions, which confirms the number of registered bidders between April and May increased from 3.5% to 3.9%. And the number of people who were registered that actually raised their paddle also increased between April and May. 53.5% of bidders actively bidding in April, that jumped to 60.3% in May. So buyer activity is definitely increasing. So dwelling values, they've actually jumped over the month of May. We're up 1.4%. That puts quarterly growth now at 1.8%. This is all data both combined for houses and units. When we look at the PropTrack data, we've also seen an increase of 0.33%. For dwelling values. Now, what segments of the market are growing? In this instance, over the last number of months, we've seen the top end of the market, or the top 25% of property values, fall the sharpest, and the lowest 25% of property values have had a slower rate of decline in values. That trend has now reversed. So you can see on the left-hand side, change in house values. The top end of the market is recovering a lot faster than the lower end of the market. That trend is the same for both units and houses. So this is a trend that is often observed in a market that is starting to recover. House values have definitely increased across the month. So you can see there we've seen huge growth, 1.5% across all of Greater Brisbane, according to CoreLogic. That's a jump from 0.1% back in March and 0.2% in April. So this represents transactions that were taking place in April, because remember, this is settled sales data and it is looking in the rearview mirror. Prop track data also shows growth. It's meant to measure the same thing. The growth here is recorded at 0.22%. And it's showing that that trend in positive growth is continuing regardless of which data set we are relying upon. Unit values have also increased in Brisbane according to CoreLogic. We've seen unit price growth of 1.1% across the month of May. The unit market still performing better than the housing market, both on a quarterly basis and an annual basis. Although for the first month, according to CoreLogic, we've seen house value growth increase at a greater rate than unit value growth. And we haven't seen that since April 2022. So that'll be a trend that we'll be watching in the weeks ahead. According to PropTrack, unit values also up 0.99%. When we look at the V-shaped recovery in property value changes, so here we've got the darker bars representing the change in house values every month and the blue bars representing the change in unit values per month. So you can see the decline from the peak of the market back in June 2022 through to October last year. That's when the rate of decline was at its greatest. Since then, we've had a recovery. And you can see for the last 3 months, we've now seen positive growth in both the unit market and the housing market here in Brisbane. We don't expect that this V-shaped recovery will continue along this same trajectory, but we do expect the growth to remain positive in both segments of the market, given the fundamentals of low supply and high demand. When we look at the rental market, vacancy rates do remain low. CoreLogic data here shows the rental vacancy rate for units is sitting at 0.7%. Now, the 10-year average vacancy rate in the unit market is 4.1%. So you can see there that there's been a huge shift, which is why we're seeing such strong growth in rents. In houses, the rental vacancy rate is 1.3%, and the long-term trend there for Brisbane is 3%. So very tight markets for tenants looking to rent. Investors have actually been selling out of the market. Now, this is a really interesting trend. When we look at the proportion of new listings that were assumed to be investor-owned properties in Brisbane, you can see that there was a sellout late in 2021, early into 2022, where we saw approximately 41.3% of properties listed for sale that were assumed to be investors offloading investment properties. Now, the pre-COVID average is assumed to be 26.3% there. So a lot of investors offloading properties at that time. That was also a time that you may recall aligned with when proposed land tax changes were introduced. We've had rental reforms during this period as well, indicating a lot of investors may have just capitalised on a strong market at that time. But you can still see we've got 29.8% of investors are assumed to be selling out. That's longer or higher than the long-term average. So is it any wonder that we've got a vacancy crisis when there's simply not enough stock and more investors have bbeen offloading? Rental listings also remain very low. So you can see the dotted line here is the long-term trend for the number of total rental listings for Brisbane dwellings. The red line is this time last year, and then the blue line is the current day. So we're 3.6 below this time last year, but we're 39.4 below the 5-year average. And this is at a time where we've seen that huge spike in the demand for properties here in southeast Queensland off the back of the post-COVID interstate migration trend, as well as opening of the international borders. It's not a surprise that rents have increased. What I will say is that the housing rents are up 9.4% over the last 12 months. That appears to have moved through the peak growth cycle. Although we're still seeing growth, the magnitude of that growth is starting to come back. In the unit market, we're still at or near the peak. Last month, we saw 16.5% annual growth. That's at 16.4% now, so we're still trending at the highest level of annual growth in that segment of the market. So in summary, what we will say about Brisbane is that the buyer depth has been progressively increasing, and this is predominantly due to low stock. So we're seeing a concentration of buyers looking at properties that become available simply because there's fewer properties that are listed. Lineups are back, and we're seeing this for quality properties. And you will have seen in one of the previous slides the lineup of that we took, a photo of a lineup that we took outside of a property in middle or inner ring Brisbane. This is not uncommon, and we're seeing this more and more as time goes on throughout 2023. Buyers are actually becoming more confident on the ground. We're seeing multiple offer often, and we're seeing a lot of buyers stretch, with some auction results very strong. It only takes 2 bidders to really want a home, and they're pushing those prices up, often beyond an appraisal range that our team may have put in place for buyers. So we don't see a slowdown in Brisbane anytime soon. Certainly don't expect the market growth to remain as strong as it was this month, but we definitely don't see any reason for property values to maintain a negative pathway in the months ahead, simply because there's not enough to buy. I hope that's been a helpful summary. Please connect with us if you want to pause this screen, get your phone out, scan our QR code. That'll take you to all of the links to be able to connect with us socially. Don't forget to subscribe to this YouTube channel, and we look forward to bringing you another update next month. Thank you so much. Bye for now.